Exactly 4 years ago, a cryptocurrency platform in South Africa collapsed overnight. Billions of rands vanished, and the two brothers who started it, well, they just disappeared without a trace. This is the story of Africrypt, one of the biggest alleged crypto scams in the history of South Africa, and how Rais and Kamir Kaji seemingly got away with it. Now in April 2021, Africrypt, the crypto investment platform, abruptly halts operations. Their promise to the clients was a 10% per day return, and that is all thanks to their secret trading platform. But according to the reality, it was just a black hole that swallowed an estimated 3.6 billion of investors' money, leaving thousands and thousands of people devastated. Now, who was the masterminds behind this? Two young brothers, Rais and Amir Kaji, just 20 and 17 years old respectively, when they launched Africrypt in 2019. They cultivated an image of crypto, flaunting a lavish lifestyle online and designer clothes, the international travel in the midst of a global pandemic and a crypto boom. Now their youth and confidence, coupled with the law of massive profits, was a potent combination. It just everything just looked very perfectly. But according to experts like Vian Oliver, they say that Africrypt was built on shaky foundations. They say it was a centralized system pretending to be decentralized. Also gone to explain there was no oversight, no third-party security testing, and no asset segregations. Now investors handed their money directly to the accounts controlled by Kaji's, operating on his trust. There were no audit statements, no external custodians, no formal financial licensing. Clients' money was pulled and later revealed moved at the brothers' will. Even in their own personal accounts, it was, in essence, a shadow exchange operating outside the traditional financial system rules. Now, fast forwarding to April the 13th in 2021, investors received a cryptic email from Amir Kaji claiming that the platform had been hacked and urging them to not report it to the authorities, and if they do, it could hinder their recovery. Within days, the website was then taken down, their offices deserted, phones disconnected. The brothers had seemingly vanished, but they didn't disappear. They allegedly fled first to the UK, and then later on they fled to Dubai. Now, according to a blockchain analyst, quickly saw through the hack story. Transaction data didn't show an external breach, but rather an internal movement, consistent with a classic rug pull, where the creator of crypto project disappeared with investors' funds. Money was broken into smaller amounts, mixed using obfuscation tools, and sent through offshore exchanges, making it incredibly difficult to trace. I must say, these guys had everything planned, right? Any case, so despite the scale of their alleged theft, the formal criminal charges were not immediately brought against them, and here's where the story takes a frustrating turn for investors. According to the FSCA and the FIC, initially stated that they couldn't act because at the time crypto assets were not regulated. According to the FSCA and FIC were paralyzed by legal grey zone, said Vian Oliver, and that paralysis gave operators like Africrypt the perfect cover. The Kajis exploited this vacuum. Incoming funds went through personal or trusted accounts, not corporate accounts, complicating legal recovery, and there were no standardized investor agreement or disclosure. Africrypt was a financial operation with none of the obligations of a traditional one. As investors scrambled, some took legal action. Johan Meyer, CEO of Aurum Wealth, sued, revealing in court papers that the client and operational accounts were not separated, and the Kajis held sole control of their wallets. In late 2021, an anonymous settlement offer emerged, 61 cents on the rand for investors who dropped criminal charges. Some accepted, but others like Meyer refused, moving forward and looking for liquidation. Later, a twist, Amir Kaji was reportedly detained in Zurich, Switzerland, suspected of money laundering while allegedly trying to access physical crypto wallets. However, Swiss prosecutors later dropped the case, reportedly after some key investors complained tied to settlement agreements were withdrawn. Amir was released on bail and no further prosecutions followed from the incident. Then basically 4 years on, the full truth about Africrypt and the billions that vanished remains elusive. Most investors have not fully been compensated and a comprehensive recovery of assets has not occurred. While South Africa's regulatory landscape for crypto is slowly evolving, designated crypto as a financial product, the Africrypt saga exposed critical gaps that existed. As for Ais and Kamir Kaji, they haven't publicly surfaced. Their digital footprint is minimal, but reports suggest that they may still have access to parts of Africrypt infrastructure through proxies and may even be involved in other business activities. The brothers who disappeared with billions remain a stark reminder of risks in unregulated markets and the long, difficult road to justice for those left in their wake. Now that, guys, is the story on how these two brothers were able to get away with 3.6 billion rand, and because crypto was not regulated at that time, they got away with it. Let me know your thoughts in the comment section below. Thank you for your time, and as always, cheers vir eers.